Good afternoon, traders. I hope each and everyone is doing well. I'll be diving into my trade recap for the trades that I took for December week 1. I'm glad you guys are tuning in. Okay, I took 4 trades for the week 1, the first week. I had 3 losses and 1 break even. Okay, we've got 1, this was a loss, 2 break even, 3 loss, 4, this was a loss. So on 1, 2, and 3, price went my direction. However, I remain neutral about that. I'll be diving into what happened and you'll realize and learn something from here about how emotions really play a huge role. Okay. Okay, on CADCHF, which was my first trade, I've got the value area right there and we've got our bottom value area right there. So price respects this value area and pushes down. Okay, we dive into H4. On H4, price consolidates. I was able to spot a 1, 2, 3 on H4. So I know that when I'm spotting a large continuation on H4, this is going to play really good. It's going to play really good. Okay, that was not difficult for me to acknowledge. So I dived into H1 for clear view. It's an open door system. So on an open door system, how I came about this trade was 1, 2, 3, and we've got our retrace candle right there, and I took the trade after the retrace candle. Reason why I placed the 90% rule is because of the structure. So whenever I manage the trade, I place the 90% rule. This illustrates to me that the trade is going to be a beautiful one, long as the 90% of the structure is 3%, and then there is beautiful potentials within the trade that I'm taking. Trading a structure is beautiful. Okay, so how I would have managed this trade if I wasn't taken out? I would have trailed my stop for about below this for 1%, as price is running at 3%, and not having price show any indications of reversing, I would have just left my stop at 1%, and price would have went down beautifully and short for the 9%, and I would have paid 9%. So with this trade, price took me out for a full loss on the midnight spread, which was the next day after I took the trade. I had to remain neutral with how I was taken out because, as you can see, price takes me out and immediately goes for the direction I was intending to. So what I had lacked with this chart, CADCHF, was that I laid my eyes off it. I had not been open-minded that there is another opportunity coming ahead. So I missed this trade. I missed the trade, which was about missed a trade which was about 6% and 15 stop loss, 15 pips stop loss. How we gonna see this trade? How beautiful it was. Okay, we've got our hook point and our ascending pattern. So this would have been a beautiful trade. I would have taken this on a reduced risk entry. Reason why? Because it's a non-structure continuation. It's a non-structure continuation. So we have to always bear in mind and trade the plan. So this is a missed trade, would have banked me 6%, and then this trade that I was taking out for a loss would have banked me 9%. So I remain neutral about this trade, did not force any other next trades, still traded the plan. As you're about to see, I traded the plan, always trade the plan. So let's dive into AUDCHF. On AUDCHF, we've got price reacting well from the low retest, and then it forms an expansion structure. We've got our 1, 2 and a double top. Okay, beautiful. So as I was forecasting, I had acknowledged that price is consolidating. So I knew there was something developing right there. There was something developing. There's always something developing. There's always an opportunity. So as you can see, this is a corrective. So you wouldn't be able to see unless you keep opening the door, the doorway system, keep moving H4, H1, M15. That's when you're gonna spot the trade. Okay, right here we've got our 1, 2, 3 and the hook point. I took this trade after the rejection on the dead touch, and let me dive into the M15. M15 so you can see clearly. So here's the 1, 2, 3 I am talking about. 1, 2, 3. So I did not guess this. Just open the doorway system. I just opened the doorway system. So on this trade, the trade was able to run for over 1%. Reason why I was aggressive with this trade was because of how corrective it was. This is why I was aggressive with this trade, because of how corrective it was. So I placed my stop on break even. Placed my stop on break even as soon as I saw prices above 1%. So on this trade, the 90% rule goes on for 2%. You see why I was aggressive with this trade, because chances are very high that this could just reverse up. They're very high, and what happens? Price reverses up, and got taken out from my break even. However, look what price does. Price takes me out on break even and instantly shoots for the direction I was intending to. And look how beautiful this was. Look how beautiful this was. Okay, you could say that I missed the trade here, but however, no, because this is not part of my plan. Not part of my plan. Always trade your plan. Even if you see a trade that is similar to your plan, but it is in your plan, don't trade it. Just trade your plan. That's when I started to see wins in my trades. Like, not taking invalid trades stopped when I started trading my plan. So yeah, that is the second trade. Let's dive into pound cat. On pound cat, we still have a price respecting the value area right there, top value area right there, and then we dive into H4. As we dive into H4, I spotted a V shape. So I didn't just come up with the V shape. There was a pin bar right where price has stopped. So pin bars do work for me. They've worked for me. They've banked me well. So that's part of my plan. So I've got our pin bar right there. I woke up at 3 a.m. and took the trade on H4. So this was an H4 trade. We've got as we dive into lower time frames, we've got our 1, 2, 3, but this is not a clean 1, 2, 3. It's not a clean 1, 2, 3. I would say I spotted it a bit well on M15. 1, 2, 3. Let me know about pound cat. What do you think about the 1, 2, 3 continuation? However, I was looking to bank this range, which would have been 6%. It would have been a beautiful trade, as it would have continued the move to head to the low. So yeah, that is pound cat. Let's dive into the fourth trade that I took, which was NZD dollar. So with NZD dollar, we've got price respecting this value area so beautifully. As it moves, it keeps dragging down. So as we can see, price near misses this point. So I was able to acknowledge that price is still looking for more opportunities to head down to fill this missing spot. Okay, let's dive into H1. So price respects this hook point and then forms what? A correction, and then impulses. So it as it impulses, it consolidates again. However, this is both of these are not my trading plan, so it goes down again. So now I acknowledge that okay, price is correcting, impulse, correcting, impulse. So right now this is the third impulse, correction, and with this third correction, it's a 1, 2, 3. It's part of my plan. It's a 1, 2, 3, and I've got the retrace candle right there. Why wouldn't I take the trade? That is part of my plan. So I took the trade, which was part of my plan. As you can see on M15, got a beautiful 1, 2, 3. Took the trade on H1, which was a risk entry. Took the trade, and then price took me out. So as you can see, this is the third trade now. A third trade that takes me out and immediately goes my direction. So with the first week of December, this was I feel it was a week of teaching me how to remain neutral and trading my plan. I learned a lot because price takes me out and goes my direction for 3 trades, and I'm just like, wow, price price is just unique in its own ways, and it's got its lessons. I may not bank this week, but the next week or the next after coming week, I'm gonna bank. Thank you so much for diving in. Appreciate you guys. Thank you.